Look at the screen. Mumbai-Pune Expressway. Approximately 60,000 vehicles pass through here every day, and every vehicle pays toll. Let's do a calculation. If we consider even an average toll of 300 rupees, then in just one day, the single highway collects 1.8 crore rupees, and per month around 54 crore rupees. And what about per year? It's approximately 648 crore rupees from just one highway. And this is just one highway. India has 50,000 plus kilometers of national highways where money is being made every second. Now imagine, what if you could also become an owner of these highways? Every month your share from toll collection would come directly to your bank account. Sounds impossible? Right. But today I am going to tell you a secret through which you can become a part owner of India's biggest highways with just Rs.100, and you can receive your share in toll collection every quarter. This is not a scam, and it's not something illegal like extortion. This is a SEBI regulated, RBI approved, government backed investment option. Rich people in India are already investing in this and earning crores of rupees, but 99% of retail investors don't even know about this, and by the time you find out, this opportunity will have slipped away. So without wasting time, let's start today's video. In today's video, I will tell you 5 things. Number 1, how you can invest in India's top highways with just Rs.100. Number 2, how much toll income you can generate. Number 3, which highways in India generate the most toll income. Number 4, what will be the quarterly income. And number 5, step-by-step investment process. So just watch the video till the end, because at the end, I will tell you about a platform from where you can start the investing today itself. Indian government's clear focus is to involve the private sector in infrastructural development through PPP model, meaning the public-private partnership model. The meaning is simple. The government is building highways but giving contracts to the private companies to operate them. These companies collect tolls, maintain the roads and earn profits. And now retail investors like you and me can invest in this company's project and earn a share of profit from those projects. But this is not a normal company like Reliance or Tata. This is a trust specifically created to develop and maintain infrastructure projects. We call it as Infrastructure Investment Trust. The work of these companies is simple: to buy or develop infrastructure assets like bridges, tunnels, roads, highways from which they can get regular income, mostly in the form of toll taxes. These companies are not like any other companies. They are formed as Infrastructure Investment Trust, which we also call as InvIT. SEBI introduced InvIT regulations in 2014, specifically for the infrastructure sector. InvIT is basically a trust structure that contains real infrastructure assets like toll roads, highways, power transmission lines, gas pipelines or renewable energy projects. This trust is publicly listed on the stock exchanges, and retail investors can buy the units just like shares. Now the most important thing, according to SEBI regulations, every InvIT has to compulsorily distribute 90% of its net distributable cash flow to investors. This is not optional, it's mandatory. It's clearly written in SEBI InvIT Regulations 2014, Chapter 6, Regulation 18, Sub-Regulation 16, meaning if an InvIT is earning 100 crores from toll collection, then it has to give a minimum of 90 crores to the investors. This distribution is generally quarterly, meaning every 3 months, money is transferred directly to your bank account, just like dividends. And since it's listed on the stock exchanges, you can sell your units whenever you want. Liquidity is high as compared to physical real estate, where selling property takes months. Currently, there are 8 registered InvITs in India, registered with SEBI. Their complete list is available on SEBI's official website. You can anytime check it out. Some of these are publicly listed on NSE and BSE, and some are privately held. Let's now understand the top 3 publicly listed InvITs in detail with completely verified data. InvIT number 1, IRB InvIT Fund. IRB InvIT Fund is India's first listed infrastructure investment trust, which was launched in 2017. Its sponsor is IRB Infrastructure Developers, which is India's leading private highway developer company. It is already listed on NSE and BSE. According to consolidated data, IRB InvIT Fund currently has 7 operational road assets with a total asset value of approximately 7,250 crore rupees. These assets assets are spread across Maharashtra, Gujarat, Rajasthan, Karnataka, Tamil Nadu and Punjab. The weighted average life of their asset is around 16 years, meaning these projects will operate for another 16 years and generate toll income. Now let's talk about distribution. In financial year 2014, IRB InvIT Fund gave its investors a total distribution of rupees 8 per unit. This distribution was divided into 4 quarters, rupees 2 per unit every quarter. In FY 24-25 as well, the same pattern continued. IRB InvIT Fund gave its investors a total distribution of rupees 8 per unit. This distribution was divided into 4 quarters, rupees 2 per unit every quarter. Meaning, if you held 1000 units of this InvIT, you would have received 8000 rupees throughout the year as distribution. Now, if we talk about since listing till now, IRB InvIT has given its investors a total distribution of more than 50 rupees from 2017 to 2024. According to the company's own data, approximately 29,200 million was distributed from listing to 5 years. The current market price of this InvIT on NSE and BSE is running at around rupees 60. Meaning, if you invest 60 rupees in this InvIT today, you will get a distribution of around 8 rupees every year, which is approximately 15% per annum return. Even the biggest companies like Reliance, Tata, Coal India don't give such high rate of dividend yield today. Listen to another interesting fact. On April 9, 2020, this InvIT was trading at just rupees 27 due to the COVID-19 crash in the market. Those who bought this InvIT at that time are getting around 29% distribution yield today. Brother, no bank, no stock or biggest mutual fund can give this high yield. This is called right entry at right time. I know most of the retail investors would have missed this opportunity. Even I missed, but don't worry. I have 2 systems through which you can increase your returns to a great extent, probably up to 50%. Number 1 is double compounding system, which I have explained in this video in detail. In this system, by combining both debt and equity models, you can avoid stock market volatility, earn consistent returns, and also grow your money like equity. I have added the link of this video in the description. Do check it out, and I'll tell you about the number 2 system later in this video. Now coming to InvIT number 2, India Grid Infrastructure Trust. India Grid is India's first power sector InvIT, which was listed in June 2017. Its sponsor are KKR and Sterlite Power, both globally reputed companies. India Grid doesn't invest in highways. Its focus is on the power transmission and renewable energy. According to the data, India Grid has 41 power projects, including 17 operational transmission projects, 3 greenfield transmission projects, 19 solar generation projects, and 2 under construction battery energy storage systems. These projects are spread across 20 states and 2 union territories. India Grid's total asset value is around rupees 14,000 crores as of latest reports. India Grid's biggest advantage is that its revenue model is regulated. Power transmission charges are decided by CERC, meaning Central Electricity Regulatory Commission. So revenue is predictable and government backed. Risk is less than the highways because transmission charges are government guaranteed. Look, no one knows how many vehicles will pass through a highway today. Some days there are fewer, some days more. But India Grid doesn't have such tension because transmission charges are government guaranteed. India Grid InvIT also does quarterly distribution, and in FY 24-25 they gave a distribution of rupees 15 per unit. According to a May 2025 report for FY 2025-26, India Grid announced a distribution guidance of rupees 16 per unit, which is 6.7% more than the previous year distribution. According to India Grid's InvIT's investor presentation Q1 FY25, from listing to Q1 FY25, a total of 89 rupees 72 paise per unit has been distributed. India Grid InvIT's current market price is running at approximately rupees 170. So the annual yield comes to around 9 to 10%. By the way, remember one thing, these InvITs are listed on stock exchanges and their prices change daily, sometimes up, sometimes down, same as shares. Similarly, the distribution received also keeps changing. There is no guarantee. So should such assets be kept in your portfolio? Well, you have to think before investing. Now coming to InvIT number 3, Power Grid InvIT. Power Grid InvIT is India's first PSU, public sector undertaking, InvIT, which was listed in May 2021. Its sponsor is Power Grid Corporation of India Limited, which is Maharatna CPSE under the Government of India. It is considered as the safest InvIT because it's government backed. According to the data, Power Grid InvIT has 11 transmission assets, including approximately 7,500 plus circuit kilometer transmission lines and 3 substations. The company's market cap is around 8,650 crores. Power Grid InvIT gives consistent distributions. For the last 4 years, Power Grid has distributed rupees 12 per unit every year consistently, meaning every quarter 3 rupees per unit. The current price is approximately between 90 to 95 rupees. So the yield comes to 12 to 13%. Power Grid InvIT's biggest strength is it's a government company, so default risk is almost zero. Revenue comes from government guaranteed transmission charges, but the yield is slightly lowered as compared to highway InvITs because the risk is also lower. For conservative investors, this is good option. If you want to create a portfolio of all InvITs, I'll tell you an amazing system through which your returns can be maximized. Suppose you invested rupees 10,000 in IRB InvIT at the current market price of rupees 60 per unit. You will get approximately 166 units. Based on FY24 data, if you get an annual distribution of rupees 8 per unit, you will receive rupees 1,328 in a year. This will be distributed quarterly, meaning approximately rupees 332 every quarter. The yield is 13.28%. Wow, this is better than FD, which is currently giving 6 to 7%, and it is also beating inflation. But if you want to increase your yield, you have to follow the InvIT reinvestment system. If you follow the system correctly and show a little patience, you can increase your yield up to 50% after 8 to 10 years. Look, the system is very simple. Every quarter, with the distribution you receive, you have to buy more units. This will start the magic of compounding, and every quarter your income will keep increasing. Let's understand with a practical example. Suppose you invested rupees 10,000 rupees in IRB InvIT at rupees 60. You got 166 units. The first quarterly distribution will come around rupees 332, with which you can buy 5 more units. Now you will have a total of 171 units, and in the second quarter you will get a distribution of 342 rupees. With this you will buy 5 more units. Now the total units will be 176. Continuing like this, as you keep getting quarterly distributions, you will keep buying additional units. After 10 years, you will have a total of 580 units, from which you can get a quarterly distribution of around 1,160 rupees, annually around 4,640 rupees. Here, your initial investment is only rupees 10,000, on which you can get an annual distribution of 4,640 rupees, which is annually 46% of yield. And moreover, the market value of 580 units can be around 34,800 rupees, assuming the same price of the InvIT and the same distribution every year. Now you must be thinking, why not to put all the money in the InvIT? But wait a minute, before investing in InvITs, understand the risk associated with InvITs too. Look, no investment is risk free. There are risks in InvITs too, and I will tell you honestly. Risk number 1, traffic volume risk. This is specifically for highway InvITs. If there is an economic slowdown or petrol prices increases a lot, highway traffic can reduce. This will impact toll collection and distribution can decrease. See a real example. During the COVID lockdown in 2020, the government gave a toll waiver for a few months. This temporarily impacted InvITs income, but this was just a short-term disruption. In the long term, traffic became normal. The simple solution to avoid this is choose diversified InvITs that own multiple highways in different regions. If traffic decreased in one highway, other highways can compensate easily. Risk number 2, interest rate risk. When RBI increases interest rates, InvIT unit prices can come down a bit because investors shift towards fixed income options like bonds. Plus, InvITs themselves use debt to acquire new assets, so their borrowing cost will increase also. The simple solution to avoid this is hold InvITs for long term. Ignore short term price fluctuations. Distribution will keep coming regardless of market price, so you don't have to worry about ups and downs in the market price. Risk number 3, regulatory changes. The government can change toll policies. Concession terms can be renegotiated. The government decides the toll rate revision formula. As per current rules, toll rates are revised annually based on inflation, but this policy can change in the future. This can affect InvITs income. Might be positive positive, might be negative. The simple solution to avoid this is choose government-backed InvITs like Power Grid, where revenue is regulated and government guaranteed, or diversify across different types of InvITs. Risk number 4. Asset concentration risk. If the InvIT has only 2 to 3 assets and some major issue happens to them, the entire income will be impacted. For example, some of IRB InvIT's projects concession period are ending in the next few years, after which those assets will be transferred to NHAI. According to a detailed analysis from September 2024, distribution per unit was 10 rupees 55 paise in FY18, which came down to rupees 8 in FY24, partly because of asset handovers. The solution to avoid this is not simple. Regularly check the InvIT's portfolio. How many assets there are, what is the remaining tenure, what is the remaining concession life, whether future acquisitions are planned or not. All this is disclosed in quarterly investor presentations. Overall, the point is that InvIT is risky but manageable. There isn't the volatility of stocks nor the guaranteed returns of FD. This is a middle ground where there is both stability and growth. Make an informed decision, do research and invest according to your risk appetite. Now that we have understood so many things, let's also understand taxation. InvIT taxation is a bit complex as compared to normal stocks, but once you understand it, you can save a lot of money. Look, when you get quarterly distribution, it's divided into 3 parts. Number 1, interest income. Number 2, dividend income. And number 3, return of capital. Different tax rules applies to each part. First, interest income. This is approximately 40 to 50% of the total distribution. This is taxed as per your income tax slab. If you are in the 0% tax bracket, 0% tax will apply to this part. If you are in 10% tax bracket, 10% tax will apply. And yes, TDS is also deducted on this part. Second part, dividend income. This is approximately 20 to 30%. This is also taxable as per your slab. Earlier, dividend was tax-free, but after Finance Act 2024, it's taxable. TDS is also cut here. Third part, return of capital. This is approximately 20 to 30% and it is completely tax-free. This is basically a part of your invested capital coming back. So tax doesn't apply here. And yes, whenever you sell units, tax also applies on capital gains. After the new Finance Act 2024 amendments, if you sell units after holding them for more than 12 months and paid STT, it's long-term capital gains. There is an exemption of up to rupees 1,25,000 annually on LTCG, after which 12.5% tax applies. If you sell before 12 months, it's short-term capital gains, which is taxed at 20%. Let's understand this with a practical example. If you invested rupees 1 lakh and got rupees 10,000 as annual distribution, in which rupees 4,500 is interest, rupees 3,000 is dividend, and rupees 2,500 is return of capital. If you are in the 0% tax slab, the entire income is tax free. If you are in the 10% tax slab, rupees 450 tax on interest, rupees 300 tax on dividend, and 0 tax on return of capital. Total tax rupees 750. Post tax return rupees 9,250, meaning post-tax effective yield 9.25%. And if you are in 30% tax slab, rupees 1350 tax on interest, rupees 900 tax on dividend, and 0 tax on return of capital. Total tax rupees 2,250. Post-tax return rupees 7,750, meaning post-tax effective yield 7.75%. This is still better than FD's 4 to 5% post-tax return. Now let's understand the step-by-step investment process. The process of investing in InvITs is simple, but it's important to follow the steps properly. First of all, you need a demat account because InvITs trade on the stock exchange. You can use any broker like Zerodha, Grow, Upstocks, Angel One, ICICI Direct, anyone. If you already have an account, you can go straight to the next step. If you don't have a demat account, don't worry. Account opening is done online. For KYC, you need only PAN card, Aadhaar card and bank detail. The account becomes active in a day or two. Go directly to the broker's official website and open an account. Now step number 2, research and comparison. Compare all the listed InvITs. Check portfolio size. How many assets are there? Where are they located? Look at distribution history. Have they been distributing consistently in the past or irregularly? Check debt levels. Is there too much loan on the company? Sponsor quality is also important. Trusted names like IRB, L&T, Power Grid, KKR are better. Asset location also matters. Traffic remains consistent in metros like Bangalore, Mumbai, Pune. Every InvIT's official website has an investor relations section where quarterly presentation, annual reports, distribution history, all information are available. IRB InvIT's website is irbinvit.co.in. India Grids is indigrid.co.in. Power Grid InvITs is pginvit.in. Download these presentations and read them, understand the financial data, and only then make your decision. And if you want to make the work easier, give these presentations to ChatGPT. It will analyze and tell you itself. Now log into your broker's app or website, search for the name of the InvIT you want to buy, look at the current market price. If everything looks right, buy it. Now every quarter, March, June, September, December, companies hold board meetings and declare distribution. A record date is fixed. If you have units in your Demat account, on that record date, you'll get the distribution directly to your bank account. Money will be transferred directly to your registered bank account within 7 to 10 days. SMS and email notification will also come. And yes, remember, TDS is cut and the net amount is distributed. And yes, your work doesn't end here. When quarterly result comes, check them. Is toll collection increasing or decreasing? Have new assets been added or not? Is debt being managed properly or not? Company announcements regularly comes on NSE and BSE website. InvIT updates are also available on major news websites. If you feel an InvIT's performance is consistently poor, you can exit and shift to a better InvIT. There is liquidity, so there is flexibility also. Now imagine 10 years later, you have 1 lakh units of multiple InvITs. Every quarter, rupees 2 to 2.5 lakh is coming as passive income. No job, no tension. Just highways are working and you are making money. Transmission lines are delivering electricity and money is being generated. This is not a dream, it's a strategy. And now it is the right time to execute this strategy because the InvIT market is currently in a growing phase. Competition is lower, yields are high, awareness is also low, so valuations are reasonable. 5 years later, when 20 to 25 InvITs are already listed, competition will increase, yields will compress. The 12 to 13% yield available now may become 7 to 8% in the future when the market matures. Right now, there is an early mover advantage. So the final message is educate yourself, take an informed decision. If things still seems difficult or there's confusion, start with small amount. But start. Even rupees 5 to 10,000 is fine. Buy some InvIT units, experience how quarterly distribution comes, understand how the system works, then gradually build your position. Result will start showing in next 3 to 5 years. And yes, an important disclaimer, this video is only for educational purpose, not financial advice. Currently, I am not SEBI registered advisor. Whatever data I have shared is from publicly available sources. But before making an investment decision, consult your financial advisor. Do your due diligence. Past performance is not guarantee of future returns. And yes, I have explained the double compounding system in this video in detail. In this system, by combining both debt and equity models, you can avoid stock market volatility, earn consistent returns, and also grow your money like equity. I have added the link of this video in the description. Do check it out. If this video was helpful, like it and share it with all your friends. And don't forget to subscribe to my channel. We bring such insightful videos every week so that investors can take benefit. And yes, like InvIT, REITs are also an amazing system. Real estate investment trust where you can invest in commercial real estate with just rupees 500 in the biggest malls of India, office buildings, IT parks, everywhere. You'll get rental income and capital appreciation also. That's also an amazing opportunity that very few people know about. I have also put the link of this video in the description. Do check it out. See you in the next video. Jai Hind.